Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. Last week, I said that the Russell 2000 would most likely pull back from the 20-period moving average, and as you can see here, I drew that line projecting that price action, and that's exactly what happened. Not only did the Russell pull back from the moving average, but it far surpassed my downside target of 149.50. Now, what does that mean for next week? Well, a lot of things are going on in this chart, and if you're not familiar with technical analysis, it may not seem as clear to you, but I'm going to do my best to clear that up right away. You could see that this candle, as I zoom in, that is a very long green candle engulfing the previous candle, although that's not a traditional bullish engulfing pattern. That's strong enough to be considered a bullish candle. And on the way down, we have a drop in volume. The drop in volume on the way down suggests that the sellers are losing momentum. In addition to that, the price action has pulled far below that moving average, and that wide divergence, known as the rubber band effect, will most likely draw that stock back up. And my target price for next week is going to be this gap fill point right there. You see, there's a gap that was left earlier in the week, and I think that the Russell 2000 is going to rally up to that. My target price, for those of you that are interested, 150.55. Now, finally, if we look at the bottom of the chart, you can see that the oscillators down here are starting to pivot up. This stochastics oscillator is hinging. I believe that that will continue higher just like that. And we are just a hair away from a buy signal on that CCI. But what's most important is, as you can see, the price action here is showing a lower low from yesterday, but the CCI is showing a higher low, and that's known as a positive divergence. It's one of the most important signals you could watch for in the CCI. So that's the Russell 2000. Now, if we look at the Qs, that's a tech sector, QQQ. You'll see that my lines on the chart are from last week's forecast. I said that we would most likely rally early in the week, and we did that. Monday and Tuesday we rallied, and I said we would pull back. Now, what's most amazing is you can see my pivot point here forms exactly on this red candle from Wednesday, and then it did pull back. So we did hit the target early on in the week. And what does that mean for next week? Well, again, we have a good strong green candle, but I'm not as bullish on the Qs as I am with the Russell 2000. Why? Well, we have a drop in volume here, which does not show extreme motivation on the buy side. But the mixed signals are coming in so that you can see that the stochastics is starting to flatten out from a downward curve here, and the CCI is starting to move up. Now, I will become more bullish if the CCI starts to cross over that momentum line, but all eyes are going to be on the 20-period moving average as a resistance point. And as the tech sector starts approaching that 20-period moving average, we have to keep a close eye on the volume right there, because if the volume starts to drop, that could tell us that the profit taking is short to follow. Now, my target for the Qs is 275.32. Take note of that, and we'll see next week whether or not we hit that target. Now, if we look at the spiders, ticker symbol SPY, I did something that I normally don't do. I did this zigzag thing here, and I said I normally don't do that, but I did say early on we would drop. Well, guess what? Monday we did that. And then I said later in the week we would rally, and we did that. Wednesday, we didn't get as high as that 20-period moving average, but that timing of that pivot point was spot on, and then we dropped. Look at the end of the line. My target there, 330.12. We hit it during the week, but we almost closed this Friday here on the 25th. We almost closed exactly on that. So what does that mean for next week? The spiders most likely will start to rally here back up to the moving average like some of the other markets I mentioned, mainly because we see a buy signal on the CCI, and that moving average really has me concerned, because as we move into October, there is a good chance that the month of October could wind up lower. Why do I say that? And I'm going to back out to a monthly chart here and show you the monthly chart for the S&P. If next week we close anywhere where we are now, slightly lower or maybe even slightly higher, let me zoom in one more time because this is that important. You could see that this is a bearish engulfing pattern on higher volume for the month. Okay, that's significant. So anyone deciding to take a long position, I would suggest you keep your stops very close and make sure you're taking your profits as quickly as you can for the short-term traders. This red candle on the monthly chart is also showing a significant increase in volume, and the oscillators are rolling over. We're almost at a sell signal on the monthly chart for the spiders, and that's why I say October, and hold me to this. October, in my opinion, has about a 90% chance that it will be a down month. And that would not surprise me whatsoever if we see that. So that's my forecast for the spiders. Again, to reiterate, my price target, that's going to be 334.13. Now, with the spiders, we often compare that to the volatility index, which is inversely related to the S&P, also known as the fear index. And you can see that my forecast was pretty much spot on. We did not go lower early in the week, but we wound up right at my target price, which was 29.2. And what does that mean for next week? Well, see that red candle? We got to close below that moving average, and the oscillators are rolling down. So I think that the VIX is going to go lower, and notice how the angle of my line is right here. I'm basically mirroring or mimicking this downward angle from this leg back here and running it parallel. So I think that the VIX is going to drop, and that target is 23.69, at which time the VIX will most likely start to pivot, and that could be the continuation of lower prices on the major markets. So be very careful. Once we hit that price level, we're now very, very close to a support level from back here, back in early August. And it wouldn't surprise me to see any bouncing of the VIX in this particular area. Now, finally, the diamonds. Out of all the forecasts, this one did not hit. I thought the diamonds would go up and test that 20-period moving average. It did not. Instead, it gapped down. Now, I'm going to erase all these lines and redraw what I think we could see for the diamonds. I don't see a massive move higher, but look at my angle. I'm mirroring what we saw in the previous upward legs, and I'm dropping it right at that gap fill point. I think that the diamonds could easily go back up to fill that gap. It's going to be 276.25 on my target. And the other supporting evidence that we see of that is today, again, the 25th of September, the CCI crossed with a buy signal. And it's a good chance we could start rallying the CCI, which in turn would attract some more buyers. Take your profits quickly. Keep your stops tight. I'm talking to the traders out there, investors. It wouldn't be such a bad idea to buy and protect or hold what you already have, and then keep an eye on the monthly charts. So that's it. Make sure you click the like button, subscribe button, share with your friends, and I'll talk to you next week. So long.